All right, so coming into today, I was leaning more bearish. Why was I leaning more bearish? If you can look here, this purple line here on ES is the consequent encroachment. We had a large daily fair value gap here, which we wicked into. This is on bar replay mode at the moment, and on NQ was kind of the same way. So as you can see, when I came in to do we'll stick with NQ for now because that's where I took my trade. When I came into the day, I said bearish below here. So this is the consequent encroachment. So with that, bearish below here, and then I was looking at this 1 hour fair value gap as right, if we hold here, okay, maybe we could go higher. If we close through this on any momentum, I'll be looking lower. So let's take a look at the exact trade I took. So on market open, as you can see, we had this is 930, 935, 945. So not only did we create these 5-minute fair value gaps, we also inversed a 15-minute, and we did all this with momentum. So at this point, I was looking for really just a retrace to get on board with the trade. Yeah, so at this point here, I was pretty convinced we were probably going to come down. Kind of my target were these equal lows here, and this orange line is the price we opened the week at, which we often trade back to as a zone liquidity. So we had these equal lows, and that was kind of my overall target. Really all I was looking for here was a retrace and then quite a large stop. And again, today is Monday, so I'm only half hour. I don't put a ton of risk on. So this was my entry here. And this is kind of what I talk about, because there was two things I did today that I was not happy about on reflection. One was, originally when I came into the day, what I said was I actually want to see a deeper retrace into here because we're just in such heavy premium. So the original trade I had set up was actually an entry here, stop above here, and target here. But once we moved so far away from the price action, I kind of thought, okay, I don't think we're going to get that deeper retrace just because of the heavy momentum we had here. So I ended up entering here. Now what I could have done here a lot better was, typically if I am waiting for a retrace inside of this zone, I should be on the 1 minute. So I've got the green light at this point. I've got my inversion, we've taken liquidity, which is the daily fair value gap. And right now I should be down in the 1 minute. So right here I just blindly entered the first retrace and left my stop a lot of breathing room. We'll get on to the stop second. But realistically what I should have done here is wait on the 1 minute and wait to see an inversion here, and we have not got it. This probably would have been my entry here. Just because we had a 5 minute here, I would have probably taken that. If I had taken this, my stop would have been a little higher. And let's just take a look at the stop placement. So even when I place this stop, so this purple line here is the consequent encroachment of the 4 hour fair value gap. If you look here, we have this wick. So when I place this, I even said to myself, I should probably place it here, not just below, because typically if we do come back into this area, we'll test this this wick here and then reverse. And the only reason I didn't do it was I have X amount of dollars for a half risk day, and like this would have cost me nothing, maybe a couple of bucks. But I was just like, NQ is the heavier asset. If we do come up here, I don't see it going that far. It was just dumb, really. Like, this is where the stop should have been. I put it here. And as you can see, price came up and did exactly what I thought it would do. It came up to here, tested this wick, and then rebalanced, and then displaced with speed. But it was tricky. It was tricky price action. As you can see here, we came back up again and tested that area. So really, this is really the trade of the day right here, and the displacement off this. And this is after my criteria. I don't enter trades past like 11:10 or so. But as you can see, directionally, I was correct, and it looks like we're probably going to roll over down into this zone. If you look at NQ, the reason I was also so bearish is if you look on NQ, we have all these equal lows, and we have this gap here. So that was my target. Like, I don't think it's actually easier to see on the daily. I think we're quite extended now. I think the two zones I'm looking at is this gap to be filled. If we lose this gap, we're going to take these equal lows over. Oh, sorry, 1 second. If we lose this gap, we will take these equal lows here. And if we lose that, we have a monthly gap down here with a gap, a monthly fair value gap on the chart here. Let me actually just go in the monthly so it's easier to see. We have a monthly fair value gap here. It's also a 382 from the macro Fibonacci from here to here, which coming back and hitting a 382, it still keeps the trend bullish. So we have the fair value gap on the monthly. We have this order block that created the impulse move we saw from tariffs, and we've got a gap on the chart. So it's a crazy strong draw, and that's where I think if we do reverse, which I think we will, this will be the point, the most extreme point we'll get to, which we're quite close to now. But until then, like for today, I was shooting for, as I said earlier, just this gap here, because I don't think we're going to go higher without taking out these equal lows and this gap. It's just too obvious. Yeah, so really the lessons from today, when I get the green light, which I did here, plenty of inversions, closing through with speed through London, is to, when waiting for a retrace, just go to the 1 minute and try find an inversion on the 1 minute, and that can be my entry point. And two is just don't be greedy with my stops. I knew when I pressed this trade to give it that extra bit of breathing room. That's a little bit of cognitive dissonance, or I don't know what the hell went on there, but just that extra bit of breathing room would have probably made this trade close to a break even. Because when I got back to my apartment, I would have brought my stop to break even here and kind of just let the trade run out. And I'd imagine we're probably going to come back up here before we go lower. So it probably would have ended up being a break even day, but it could have been managed better. You know, my entry, my stop placement, I'm reading the market well in terms of the direction it's going. But that's just to enter off that pullback. You're entering such heavy premium. I did get my stuff in the breathing room, just not enough. But overall, listen, it's a half-hour day, reading the market well. There's lessons to be learned here that I'll carry into my trading going forward. So, listen, it's a cheap price to pay for a lesson that could save me a lot of money along the way.